Many cities in Arizona are facing an ever-increasing unfunded liability burden due to the issues of the public safety personnel retirement system, which covers the pension for police and firefighters.
Around 2000, PSPRS had more than enough money to cover the retirement of every one of its retirees, as well as every one of its active members. That's active firefighter and police officer in Arizona. So after that, we had two major economic disasters with the dot-com crash in the early 2000s and the housing market crash in 2007, 2008 years. So that was really one of the key factors for causing a downfall with PSPRS.
Originally started in 1968 as a way to establish equal benefits across all Arizona public safety agencies, the system works by having employees and employers of each fund put money into the system, and then the PSPRS board invests the money into traditional stocks and bonds, as well as alternative investments. The returns assist paying for the retirements of the various funds around the state for thousands of retirees. Like many institutional investors such as pensions, PSPRS suffered severe losses during the financial downturns. These losses were made worse due in part to a perk known as the permanent benefit increase, which applied a flat dollar amount increase to every retiree in the system when PSPRS produced a positive return greater than 9%. The permanent benefit increase, also known as PBI, also capped the amount of annual pension increases while excess cash carried over to following years. Palmer said under this mechanism, the PBI delivered pension increases for 28 consecutive years, even when the trust produced very little money.
We have our smaller locales where the whole intent, again, was to increase the pension levels of those retirees to bring their retirement on par with that in the urban areas. So this actually created a disproportionate impact on the employers. And that impact, year by year, slowly compounded and really presented quite a problem. The PBI is the mother of the law of unintended consequences. It was absolutely well-intentioned. It's just the framers of the PBI, there's no way they could have envisioned events like the dot-com crash or the housing market crash or the mathematical problems that the PBI would present years after.
As the market returns dropped, the contribution from PSPRS fell. However, the pensions are by law guaranteed to never lower, so each municipality had to make up the difference.
People have to understand, too, that PSPRS is a state system. It was designed by the legislature. They did not give us, any of the municipalities, any opportunity for input on what we thought the benefits should be. So they gave very lucrative benefits to police and fire and just told us to pay the bill.
In 2016, voters eliminated the permanent benefit increase and replaced it with a cost of living adjustment capped at 2%. The COLA is based on the average annual percentage change in the Metropolitan Phoenix-Mesa Consumer Price Index, but it will not exceed 2%. In addition, after years of lobbying following the tech bubble disaster, PSPRS was authorized under law to invest in alternative assets, such as private equity, real assets, and real estate bonds. Palmer says these assets seek stable and safe returns to protect employers from unforeseen contribution rate increases.
The exact reason why we have those in the portfolio because they lower the volatility, because these are privately traded or privately acquired investments and they're not susceptible to every peak and valley that the market's going to bring. So on top of very high returns that these deliver, they also give a great amount of sustainability and they help buffer out what would otherwise be really terrible years for PSPRS.
During the fiscal year which ended May 30th, 2017, PSPRS had an investment return of greater than 12%, which Palmer says shows the PSPRS portfolio can generate profits even with the investment strategy of avoiding losses. However, it will take time for the changes to make a difference with the unfunded liability facing many cities in Arizona. 20% of Prescott's general fund budget goes to the $78.4 million unfunded liability. Meanwhile, Bisbee, Arizona dedicates an even higher percentage to the payment of their $17 million unfunded liability and had to make a variety of changes.
PSPRS has greatly affected Bisbee in that full 22% of our budget goes directly to PSPRS for our firefighters and police officers.
Over the last 10 years, Smith said the workforce has been reduced, along with library days being cut, and the town's pool being funded by the public or shut down completely. Smith says the town is not laying off police, rather, they are simply not replacing them when they leave.
All of these kind of quality of life situations are directly impacted by this debt.
Considering the city's sales tax is over 9% already, Smith doesn't see a tax directed for the unfunded liability as an option. He's very hesitant to go over 10% and would have to judge the consensus of the population with a choice of bankruptcy or more taxes should no help come.
Chapter 9 is in the future for Bisbee, which is a city bankruptcy. If this were to continue, we do not get relief, then there simply won't be the money to pay this.
Prescott, meanwhile, would be putting a proposition up to the voters with a hope to pay down the debt owed. According to information about the proposition posted on the city's website, if passed, the city would adopt a sales tax of 0.75% starting on January 1st, 2018, and sunsetting on December 31st, 2027, or when the city's PSPRS unfunded liability is $1.5 million or less.
It is a very fair tax. I mean, you know, I tell people, if you go out and you buy a cup of coffee at Starbucks, it's going to cost you $3. After this tax, it's going to cost you $3.02. That's just pennies for each one of us to have to give back to our community.
Others think the functionality of PSPRS needs to be changed before dedicating a fix.
It's not Prescott that created the problem. It's PSPRS, it's the fund, it's the benefits they gave out, it's the bad investments that they made. It's getting worse and worse every time. And that's where we need the fundamental change, and that's why we need our state guys on our side. And my hope is that every city and town is struggling with this, but no one's talking to each other. We need to talk with each other.
The Arizona representatives do have the PSPRS unfunded liability on their minds. Solutions are being thought up with an ad hoc committee headed by Representatives Noel Campbell and David Stringer, made up of stakeholders such as police and fire unions, various retiree representation groups, and many other organizations looking for solutions.
There's a lot of expertise out there to draw upon, and we're going to be bringing all these groups together, and we're going to be studying this problem, and we are going to, at the end of the day, try to come up with some solutions that work. At the end of the day, we will have very concrete, specific proposals to present to the Speaker of the House and to the House of Representatives to begin the process of addressing the PSPRS unfunded liability problem.
While PSPRS integrates the new strategies and the ad hoc committee comes up with a proposition in December, cities like Bisbee, Prescott, and many others across the state are left to deal with the unfunded liability. In Prescott, Torrance Dunham, PrescottEnews.com.